All right, in this video, we're going to review Crowdstrike. I own the stock in my $10K to $1 million portfolio. Check the playlist on this channel if you want to know all about that portfolio. And right now, we're going to do a quick overview of the valuation of the stock using fast graphs. If it looks like it is overvalued or undervalued over the next couple of years, and my thoughts on the stock. So this black line is the price of the stock. The orange line represents a price to sales ratio of 36. The blue line, if there was one, but it's the same as the orange line in this, would represent the average price sales ratio that Crowdstrike has traded off over the time frame we're looking at. This is the sales growth rate over this time period that's on the screen. So 52% sales growth rate. If we take out the estimated, that's going to bump up the sales growth 72% since it's been trading with the normalized price sales ratio of 36. Okay, so it's hard. We don't have a lot of historical data or time on Crowdstrike, and it's hard to know, what it should be trading at based on previous years, kind of before all this craziness, just how this specific company was valued. But what we could do is we can go to forecast. We can see that analysts are expecting growth to slow down pretty significantly from what it's historically been. 46% revenue growth in 2023, 35% revenue growth, and 25%. This is going to be different from other expectations you see out there. This factors in revenue per share growth. So if the company is issuing shares or buying back shares, this number will be different than what's out there from just pure revenue growth estimates. So if you see a discrepancy, that's why. Blended price to sales ratio is currently 28, which if we look historically, it's been 36. So it's already trading at a discount. But that growth is expected to slow down significantly. So in my opinion, it deserves to be trading at a discount to its historical price to sales ratio. The best we have with this is it just gives us the aim points of at a low in January 2025, a price sales ratio of 18. I'm comfortable with that. There's people out there that think nothing should be valued over a price sales ratio of 10. I disagree with that concept because I think some things do deserve to trade at higher multiples based on the growth in the market they're in, the profitability and execution of the business, the management team, all of that stuff. Will Crowdstrike earn or deserve a price sales ratio of 18 in 2025 if they're growing revenue at 25%? That might be a little high. So maybe it should come down to 15 or even 10. Just looking at it, if it was down to 10, you're probably looking at either a neutral or negative return over that time period. But I own Crowdstrike already. I'm not adding right now. And if the stock sells off and goes down to, say, a blended price sales ratio of 20 right now, that would mean that these timeframes start to look a lot better as long as management is still executing and they're hitting these estimates. And so at that point, I would look to add. So my outlook on Crowdstrike is I like the stock. I'm going to continue to hold my position, but it's not one that I have plans to add to over the short term, and we'll see what happens.